The physical volume of commodities moving through global ports tells a precise story about where the world sources its food. This data breaks down the global production hierarchy. India currently ranks first worldwide in the production of millets, pulses, and spices. In the second column, it holds the number 2 spot globally for rice, wheat, fruits, and sugarcane. Domestically, the scale of production continues to expand. In the 2024-25 agricultural year, the country recorded a total food grain output of 357.73 million metric tons. This chart tracks the financial capitalization of that output. Over a 5-year period, agricultural export earnings grew from $34.5 billion to $51.1 billion. This immense scale positions India as a central, stabilizing force in the global food supply chain, extending its influence far beyond domestic supply. Behind these figures is a domestic workforce of immense size. Agriculture and its allied sectors currently employ 46.1% of India's working population. Over the past 5 years, this sector has maintained an average annual growth rate of 4.4%. Maintaining a 4% growth rate annually is difficult through landmass or favorable weather alone. This performance is driven by a meticulously engineered institutional framework that maximizes yield while insulating the production cycle from systemic shocks. We can conceptualize this framework as the agricultural policy stack, a 3-tiered support system built to sustain and scale farm production. By deconstructing these layers, we can trace exactly how a baseline subsistence farming model was structurally modified into a resilient global export engine. The foundation of this system operates right at the farm gate. We call this the base input layer, where physical yield engineering occurs. Historically, crop yield was limited by traditional blanket fertilization. Maximizing output requires diagnostic precision, identifying specific soil deficiencies and applying targeted nutrients. This dashboard outlines public interventions for precision. The government issued 25.55 crore soil health cards for exact nutrient data. This is matched with high-yield seeds from 6.85 lakh seed villages. Finally, water efficiency is tightly managed, pushing the gross irrigated area to 55.8%. This explainer box defines a parallel initiative, natural farming. It integrates chemical-free, ecology-based practices across 6.39 lakh hectares to prevent long-term soil degradation. Without this base layer optimizing seeds, soil, and water, advanced market interventions higher up the stack would lack the production volume needed to function. Moving up the stack, we reach the financial and risk mitigation layer. High-yield farming presents a rigid economic problem. It requires intense capital expenditure on inputs months before the harvest generates any actual revenue. Look at formal credit support on this chart. Ground-level agricultural credit disbursement reached 28.67 lakh crore to bridge that liquidity gap. That liquidity is deployed through a scalable mechanism. 7.72 crore active Kisan credit card accounts provide timely financing directly to farmers. Deploying capital into open fields carries heavy vulnerability. A single climate event can destroy both the physical crop and the farmer's ability to repay credit. This graphic details the firewall against climate risk. The crop insurance program covered 4.19 crore farmers, processing claims exceeding 1.90 lakh crore. Below this is an income floor. PM Kisan disbursed over 4.27 lakh crore in direct cash transfers to stabilize rural balance sheets. Together, these mechanisms function as a systemic shock absorber. A bad weather year might damage a harvest, but it does not destroy the financial capital required to plant the next crop. The final structural tier is the market and infrastructure layer. A persistent historical bottleneck in Indian agriculture has been market fragmentation, leaving rural producers with poor price discovery and high logistical costs. This information box defines primary agricultural credit societies, or PACs. These are the village-level institutions that coordinate local financing and operations. Returning to the infrastructure data, you can see an aggressive modernization effort. Currently, 67,930 PACs are undergoing computerization, onboarding onto enterprise platforms to optimize physical logistics and grain storage. At the macro level, the government engineered a digital unification of the pricing network through the e-National Agriculture Market. This single platform integrates 1.8 crore farmers and consolidates trading across 1,656 physical mandis, connecting local supply directly to national demand. This final layer ensures that the physical volume generated at the base translates into realized economic value by removing geographic bottlenecks. When all three layers of the agri-stack operate in sequence, they optimize the entire life cycle of a commodity. That optimization has driven a measurable shift in domestic production volumes. For decades, the system prioritized sheer caloric volume, but recently, total horticulture production, fruits and vegetables, reached 362.08 million tons, mathematically overtaking the 357.73 million tons of total food grains. The domestic pivot toward high-value crops is mirrored in the country's international export basket. Between financial years 2018 and 2025, the share of processed food within agricultural exports climbed from 14.9% to 20.4%. The stack's primary achievement is capturing higher margins in the global value-added chain, moving beyond the role of a bulk staple supplier. Maintaining an institutional architecture of this size requires sustained and escalating public investment. This graph tracks the fiscal commitment driving the system. Between 2013 and the 2026-27 projections, the budget allocation for the Department of Agriculture and Farmers' Welfare jumped from roughly 21,933 crore to over 1.30 lakh crore. This national framework also maps directly onto global imperatives, aligning with the UN Sustainable Development Goals. Through public procurement and natural farming initiatives, the system actively targets zero hunger while simultaneously promoting resource-efficient practices. By engineering resilience at the base input level and deploying digital market infrastructure at the top, India has established a structural role as a critical stabilizing force in the global food economy.